Welcome back to another deep dive. Today, we're really plunging into the Indian market, trying to get a handle on the recent moves and, what might be next, especially for the big ones, Nifty50 and Bank Nifty. Plus, we'll unpack those institutional flows, always important, and look at some, interesting F&O stocks seeing a lot of action. We've gathered a whole stack of insights for you straight from the latest data. We're looking at places like moneycontrol.com, Trendline, niftytrader.in, Chartink, really try to cut through the noise.
Exactly. And our job today really is to boil down these reports into something useful, something actionable. We want to give you a clear picture of what the institutions are up to, pinpoint those key levels on the indices, and highlight some of those individual stocks with unusual activity. Basically, make sense of the past week and flag what to watch for next.
Okay, let's just jump right in them. Before we even get to Nifty or Bank Nifty, let's talk about the big money, FIIs and DIIs, foreign and domestic institutional investors. I mean, they're buying and selling in the cash market really sets the tone, right? So for that first week of July, say July 1st to 4th, 2025, what did that look like? What's the takeaway?
Well, it's a continuation of a theme we've been seeing, actually. The data for that period shows FIIs were net sellers again. Pulled out around 5,773 crore. Minus 5,773 crore. So significant outflow there. But, and this is the fascinating part, the domestic institutions, the DIIs, they stepped right in. They showed a net inflow of about 4,112 crore plus 4,112 crore.
Right, so it's that same story again. FII selling, DIIs buying. It feels like a constant tug of war. Does it feel sustainable? I mean, are DIIs just absorbing everything FIIs throw at them? Is there a limit?
That's the million-dollar question, isn't it? Yeah. What's really interesting is what this dynamic tells us. FII pulling back, okay, that might reflect some caution, maybe global worries, shifting risk appetite, But the DII buying, that shows real domestic confidence. There's liquidity here inside India. They're basically acting as a buffer, stopping the market from falling harder because of that foreign selling. It's this domestic resilience that's really key. It suggests a strong belief in India's own story, despite maybe some global headwinds. And this push and pull directly affects liquidity, demand, everything.
Okay, that makes sense. So that's the undercurrent, the money flow picture. FII is out, DII is providing support. Now, how are the main benchmarks reacting? Nifty50 and Bank Nifty, what are they doing? And what are the critical levels we need to watch?
Yeah, they're both showing some interesting signs. Nifty50, our sources are calling it a recovery zone. It seems to be bouncing back, holding above that 25,300 to 25,500 area. That suggests buyers are finding it attractive down there, maybe a bit of a momentum shift after some weakness. Bank Nifty, on the other hand, is more in a consolidation phase, sort of stuck, hovering between 56,000 and 57,000. Now, consolidation isn't necessarily bad. It's often like price discovery, buyers and sellers finding a balance point. Think of it like a spring coiling up. The longer it stays in this range, potentially the bigger the move when it finally breaks out.
Okay, so Nifty trying to recover, Bank Nifty consolidating, coiling up. Let's get specific on the levels for Nifty50 next week. Where's the floor? Where's the ceiling?
Right. For Nifty50, the immediate support zone to watch is 25,200 down to 25,300. That's where buyers have shown up before. If it breaks below that decisively, well, then you risk a move down towards 25,000. Stop losses might get triggered. On the upside, the resistance, the next hurdle, is between 26,000 and 26,200. That's where sellers have been active. If Nifty can clearly break above that, especially with good volume, that's a strong bullish sign. Could aim for 26,700 next.
And Bank Nifty. Same question. Where are its key lines in the sand for next week?
For Bank Nifty, support is pegged around 56,100 to 56,300. That's the zone where buying is expected to be strong. If it slips below that convincingly, the next test could be down near 55,500. Resistance is up at 57,200 to 57,400. A solid breakout above that level, again, ideally with volume confirmation, could target 57,600, maybe even higher. And the general strategy insight from our sources for the week is basically buying on dips near these support zones, which leads to the question for you, the listener, will these support levels actually hold? Are they strong enough? Or if resistance breaks, are we looking at a bigger shift? Watching the price action and volume around these levels is going to be critical.
All right, let's switch gears now. Let's zoom in a bit from the indices to specific stocks that are making waves. Our sources, using Chartink and Trendline, flagged some F&O stocks with unusually high volume. Just quickly, F&O, futures and options, right? High volume there often means big players, maybe leverage bets. It signals strong interest. So what are these top five and what's the story? Why are they so active?
Yeah, exactly. High F&O volume definitely grabs your attention. It suggests something significant is happening, maybe big interest, maybe a sentiment shift, sometimes even forced selling or buying. Worth watching for sure. Okay, let's run through them. First, Trent LTD. This one was interesting. Volume was huge, 3 times its average F&O volume. But the price, down sharply, 11.9%. So big volume on a big drop. The bias is seen as bearish, obviously, but with potential for a rebound, a bounce play. Key levels are roughly 5,400 support, 5,600 resistance. The thinking here is these sharp sell-offs can sometimes lead to quick snapbacks. You'd be looking for like a reversal sign near that support, maybe a specific candle pattern.
A reversal candle, like a hammer or something.
Exactly, yeah. A hammer, engulfing pattern. There's something visual on the chart that suggests that selling might be exhausted and buyers are stepping back in, even if just temporarily. Okay, next. Mahanagar gas. Volume here at 2.9 times average, but this time with a mild price up move, so the bias is bullish. Levels are 1,500 support, 1,600 resistance. For this one, the idea is more about momentum continuation. If the volume stays high and it holds above support, that could favor trying to ride the trend higher. Then BSE LTD of volume 2.6 times average, price down about 6.6%. So similar to Trent, the initial bias is bearish, but watch for an upside bounce. Support around 2,500, resistance near 2,750. Again, it's flagged as a potential bounce play candidate. Look for those reversal signals near the support level. Fourth, Angel 1. Volume 2.54 times average, price down around 5.9%. Similar story again, bearish bias but with possible recovery. Levels are 2,700 support, 2,900 resistance. Angel 1 also fits that bounce play category and requires confirmation near support. And finally, Bosch LTD, volume 2.4 times average, and this one was up 4.4%. So like Mahanagar gas, the bias here is bullish.
Support at 35,500, resistance at 37,000. This is seen as another momentum play. High volume on an up move suggests strength. Consolidating near support could be an entry point for longs.
That's quite a mix. A few sharp drops looking for a bounce, and a couple showing strong upward momentum. So, tactically, how should someone think about these? Our sources seem to be grouping them, right?
Yeah, they make a distinction. You've got the bull setups, that's Mahanagar gas and Bosch, and then the bounce plays, Trent, BSE, and Angel 1. For the bull setups, the advice is more straightforward. Consider buying near support, but use a tight stop loss. It's about riding that existing momentum. For the bounce plays, it's different. It's more cautious. You're not just buying because it fell. You need to wait for confirmation. Look for those reversal patterns, those candles we mentioned, ideally with volume picking up near support. It's more of a tactical, maybe shorter-term trade, looking for that quick recovery rather than a whole new uptrend. Understanding which type of setup you're looking at is pretty crucial for deciding how to approach it.
Okay, so pulling it all together then. We've got this backdrop of FII selling met by DII buying, indices kind of range-bound but in interesting zones, Nifty recovering, Bank Nifty consolidating, and then these specific F&O stocks showing either momentum or potential bounce setups. The overall outlook feels like, what, cautious bullishness?
I think that's a fair summary, yeah. Cautious optimism, maybe things are holding, but there are definite levels to watch.
So for you listening, what really jumps out? Is it that ongoing FII versus DII battle, or maybe those specific support and resistance lines for Nifty and Bank Nifty that could signal the next big move?
And if we think about the really big question here, it's how does that FII selling versus DII buying ultimately resolve itself? How does it impact whether Nifty and Bank Nifty break out of these ranges they're in? Keep a very sharp eye on those resistance levels, 26,000, 26,200 for Nifty, 57,200, 57,400 for Bank Nifty. A clear break above those, especially with a good volume, that could really be the signal for the market's next leg up. But if they fail there, or if support breaks, well then that cautiousness becomes much more warranted. The F&O action gives clues, too, about where pockets of strength or weakness might be hiding.
Absolutely. It's always about connecting those dots, isn't it? The flows, the index levels, the individual stock action. Well, that's our deep dive for today. Hopefully that gives you a clearer perspective on the Indian market right now. Thanks for joining us, and keep digging into these market dynamics.